Hi, my name is Graydon Chong and welcome to the July edition of the Agri Commodity Markets Research Update for July 2017. We've seen the S&P Agri Index remain relatively unchanged throughout July, but despite this we've seen quite a bit of volatility through commodities markets. In particular, we've seen quite a bit of volatility in the grains and oilseed space, driven a lot by what we're seeing in weather in the US. Hotter and drier conditions over the last 2 or so months have driven some considerable volatility, particularly through corn and wheat pricing. We've got spring wheat conditions at their worst on record, and that has very much helped to support grains and oilseeds prices globally over the last 4 or so weeks. We've seen that flow over to corn pricing as well. We have our short-term view that corn prices will likely continue to be well supported. Longer term, however, we do see potential for corn prices to trade below the current forward curve as heavy stocks weigh on pricing. It's a pretty similar story for soybeans. We have cut our yield estimates to 47 bushels an acre in the US due to the hotter and drier conditions. We do note, however, that heavy stocks again may well hinder prices through Q4 2017 and into the beginning of 2018 unless we see a continued deterioration in US crops. For wheat, we continue to see the spring wheat complex drive wheat pricing. We are therefore relatively supportive for Chicago wheat pricing in the short term. Again, however, with heavy balance sheets globally for wheat, we do forecast that there is likely to be some softening in wheat prices as we trade into 2018. I'll now pass over to Carlos to give us an update on the softs.
Hello everyone, my name is Carlos Mera. I am another commodity analyst here at Rabobank. In the last 3-4 weeks, we have seen quite a bit of support for soft commodities, this particularly so for sugar and arabica coffee. The main factor behind that support was the strength of the Brazilian real. We have seen a 5% increase in the Brazilian real versus the US dollar. That's part of a larger story of US dollar weakness that we have been commenting in other reports in the bank. In terms of sugar, we remain still bullish. We see sugar prices going to 15 cents per pound towards the end of the year, maybe a little bit more later on. It's not only the strength of the Brazilian real, but also some recent tax changes that we have seen in Brazil. Last week, the Brazilian government decided to increase taxes on both ethanol and gasoline, but in such a way that the relative tax change actually favors the consumption of ethanol. This means that mills are going to produce a little bit less sugar and a little bit more ethanol going forward. And the market will feel this particularly from September onwards when rainfall comes back to Brazil, the levels of ATR or sugar content in the cane goes down, and this will be the moment when mills will be more keen on producing more ethanol. If you need any more information, please read our Agri Commodity monthly report, which is on our website, and see you next month.